Now, Iran's stock markets reopened after being closed for nearly 3 months because of the war. Authorities say the shutdown was intended to protect investors in the face of economic uncertainty. The exchange is not considered central to the economy, but could provide some insight into the nation's financial situation. Iran's stock market remains largely isolated from global indices because of Western sanctions. Joining me now is Mohammad Reza Farzanegan. He's an economics professor at the Middle East, I should say, at Philipps-Universitat Marburg, Germany. Welcome to the programme. So we understand, of course, the Tehran Stock Exchange is open for business today after months of lockdown. The government's calling this a major step towards economic normalisation. Is it, in your opinion? Does a reopened stock market mean a recovering economy?
Well, the Iranian government is shifting from emergency management of the market to a more controlled normalization of the market. So as you already mentioned, 3 months of closure of the stock exchange has accumulated a lot of demands and questions on the investor side. So we have a large population of Iranians who have invested in the stock market. So according to authorities, we have 50 million of Iranians who have a share or basically counted as shareholders as a result of the past privatization under the distribution of the justice shares. So from that, of course, not all of them are active traders. So 600,000 of these numbers are basically frequent traders, and 1.5 million of them are basically active traders. So it's a kind of political topic. The people are waiting or have waited a long time for opening of the capital market. They are under the significant pressure to access to liquidities. The people. So the inflation, as you already covered in your report, close to 70% is expected to be in this current year. So the people need cash for covering their daily costs. So there would be an increasing pressure on the selling of a stock market. And at the same time, some people want to shift their money from the stock market to the other markets which were growing, gold market, US dollar, and the real estate. So this opening was basically needed, and postponing of that was quite risky for the establishment. And so the government is intended to keep this opening even at the presence of high military risk with the US and the Israel.
Well, let's look into some of the damage and some of the forecasts. I'm getting these figures from the International Monetary Fund that reports that the point-to-point inflation has hit a staggering, and you mentioned it, 73.5% is the exact figure. If the stock market is supposedly stabilising, why are grocery bills and the basic costs still skyrocketing, just for the average households across the country?
Well, obviously, part of this inflation that we are observing is due to the depreciation of the real and the volatility in exchange rate market. And part of this inflation is related to the imported materials. So the US blockade has already significantly disrupted the import of products to Iranian market. And this is a simple calculation. When the demand exceeds the supply, so we are observing these inflationary pressures. So that is part of the problem, the supply disruption as a result of sanctions and the US blockade. Also, another reason of these growing prices, the direct damages of the military attacks on key industries in Iran, steel industries, petrochemical industries, which are raising the housing costs, for example, and the packaging costs for the food products. These are growing up in the markets. And the uncertainties which exist in the market, it pushed these inflation expectations among the households. So the people are worried that if they don't buy the products today, tomorrow they need to pay higher prices. So there would be additional demand in the market to buy the product. On the other side, the supply is quite constrained by all these factors which I just mentioned.
Going back to those IMF figures, their World Economic Outlook paints an incredibly grim picture here, doesn't it? They're forecasting that Iran's economy will contract by a massive minus 6.1% this year, with average consumer inflation hovering around 69%. Are we talking about something that could inflict lasting damage here on Iran? Can any country realistically survive that kind of macroeconomic squeeze without collapsing into hyperinflation, things seen at the end of the Soviet Union, for instance?
Well, all these, of course, the prediction of IMF, as you said, -6%. Last year was -1.5%. So this is the second subsequent years that we are experiencing these negative growth. So it is not the first time that the Iranian economy has experienced such a negative growth rate. So we had the similar situation under the Obama administration sanction in 2012 and 2013, and then again under the Trump maximum pressure in 2018 and 19. And before that, of course, during the war period with Iraq, so we had even the -20% in the 1980, at the time of revolution. So this has been experienced in the past in Iran. The country and the economy has survived, of course, at the lower welfare levels. So the IMF report also predict returning back to the positive numbers in 2027, 2028, and the subsequent years until 2013. So all these predictions are based on the assumptions. It depends on what is happening on the nuclear deal, what is happening with the military confrontation with the US and Israel. So if you're observing a return to rationality and diplomacy, so this would not basically last long. So in a term of this negative picture that we have. So if the situation goes to worsening this context with Israel and the USA, of course, we would see a much concerning picture of Iranian economy. And it's a matter of time, when would be the next internal conflict and protest as a result of this economic dissatisfaction that the people are observing and a struggle that they have to cover the daily costs.
Clearly, all of this continued political, economic, military volatility is continuing very much to move the markets in the wrong direction for the time being. Mohammad Reza Farzanegan, economics professor of the Middle East at Philipps-Universitat in Marburg, Germany. Thanks for joining us.